Hey guys, good afternoon, everybody. This is the one-on-one mentoring session with Allison. I'm going to go ahead and set up this room real quick, and then we'll get started shortly. I'm not going to be taking any questions from the public, so you guys are free to sit in and listen to Allison's questions and pull any information from the session. But I'm not going to be answering any questions from the public. So just give me a few moments to finish setting this up. I'm going to send the link out to Allison, and then we're going to get started shortly. All right, perfect. Let me get this link sent over to Allison real quick. And we should be able to get started shortly.
Hey, Sean.
Hey, Allison, how's it going? Can you hear me?
Yeah, I can. I'm good. How are you?
Perfect, doing great. All right, so let's see. I think I got everything set up. So I'm not sure if we ever did a one-on-one, but I mean it's pretty much like the normal mentoring session. It's just with me and you. So feel free to ask whatever questions you have, and then we can cover anything, literally any questions you have. So do you have any questions lined up or?
Yeah, my main thing was like my entries. I was working on a demo account. I can't remember what day it was. And I mean, my psychology, of course, is something that like I need to for sure work on. And I think that's just like your psychology can never be like 100% in my opinion. Like you always will. I know that like if I lose one trade, I need to just stop for the day because honestly, like I start getting into stupid stuff and um there was a day where I was up on demo. I actually worked by myself and I was up like I think it was 1.5%. And like I should be happy with that. And for whatever reason, I decided to just, keep blowing trades. And I'm like, like it's not worth it. Um,
Yeah, I
so
agree. I mean, I'm the same way. Like, for me, I'm in the same position. If I lose a trade, I'm usually done for the day, except like, unless I know like for sure, like I just got stopped out at random and I know I should have kept going. But I know what you mean. Like you take loss and you're like, okay, I'm gonna make it back. And then you have one more loss and you're like, okay, I'm gonna make it back. And then you never make it back. And then you end up in
yeah,
full. And then it just, it compounds over time and it sucks because once you take like, more than two losses like in a day, you're set back so far and it's like, how am I going to get out of this hole and then finally make it into profit? And at that point, you just keep going. It's like a downward spiral because you have a losing day, you have another losing day, and you're just like, okay, I'm gonna just take this one trade. It's gonna make everything back, and there goes your account.
exactly.
Mhm.
Yeah, and that's for sure something that I don't know if I'm gonna turn. Oh, never mind. Um, but yeah, that's one of my things that I think that's just a me thing, just to sit on. So, anyways, my when I was taking the trades, I kept finding that like, and maybe this is just my opinion, or I don't know how to go about it, but like my entries aren't great. So like if I'm on the live and I'm listening and sometimes you jump right into a trade and then it's like other times you don't. And we've talked about it before. Um like larger candles, we kind of wait for a retest or retracement and then um I noticed today on the live, like you were talking about with sideways movement, sometimes that would kind of lead you in a way to like, if you're close to liquidity and it starts going sideways, you can kind of expect it to go in that direction. But for some reason, my eyes just aren't training to that. If you have any tips on that, just, I think I get one good trade and then it goes back into that range. And for whatever reason, I just want to keep trading that. And I think that that's what's messing me up, because I don't know that I really should be trading in that range, if that makes sense.
Yeah, no, definitely. It makes 100% sense. So like, and I get what you're saying. Like, you get greedy because you have that one trade and you're like, okay, this is going to happen again. You get into it and it is a complete opposite. And you're like, man, I should have never got into that. I think one thing that you can do and to train your eye is just have a clean chart, a clean chart with nothing on it. And I think one of the best things to do, and this is what I do sometimes too in my free time, like I'll mark it up from the hourly, because this is a good, like, it's just a good gauge between how like price moves, because typically every hour price will like move in a direction or it'll go sideways. So like if you just mark up every hour, like 6 o'clock, 7 o'clock, basically like when the market's moving. So basically 6, 7, 8 up until 12. If you just mark up lines there, this will help you practice identifying when price is in a range and when it breaks out. So like, for example, right here, you can see that price was pretty much in a range from like 6 o'clock until like 6:30 when the market opened up. And this will train you to not get into like random positions, like you said, like when price pulls back into it, because sometimes you'll see something like this where price is moving sideways. It'll break out and then it'll come right back into the range. And then from there, you're going to try to catch the bounce back to the upside, right? That's usually what happens, like a break and retest type pattern. But lately the market's kind of been going sideways, breaking out, and then just continuing in that direction. Like it was going sideways here, market opened, pushed up, broke out, went sideways again, pushed up, broke out, and then went sideways again, and just kept doing the same thing, over and over again. So I think if you want to practice just training your eyes to see these things, you can just split up time by hour and then just see how the market moves, because you'll see like between here and 6 and 7 price periods went sideways the whole time. And this is when we stop trading. But lately this has just been the pattern. Typically it doesn't move like this as often. It usually will go sideways or just, continue trending throughout the entire live session. But we're going to the summer season. So you're going to see this a lot, where price will consolidate, push away, consolidate. And I think the main thing is just understanding when to stop, right? Because I feel like not just you, but like with everybody, including myself, it's like when price ranges and it shoots out, you kind of want to keep going because you think that same pattern can repeat. And it does. You can see here it does repeat. It's just not, it doesn't happen all the time. Like for example, here from 6 to 7, you could have done what you were talking about, where price pushed up and then you retested and you could have kept going in. But if you traded here between 7 and 8, you kind of would have been screwed because price went sideways for like a whole hour. So this is like one practice that you can do just to get better at seeing the market. But realistically, like how long have you been trading? Have you been trading for a while now, or?
I kind of started out with one group. I don't even remember the name of the company. They ended up going down a couple of years ago, and they were like retail trading. And then I started on this other group with it was like basically like smart money concepts, so like following ICT. And like I'm not saying at all that he's not a great like mentor for the market, but for me, I would always, and you've even mentioned it before, like I would literally go to bed with my trade being in profit, and then I'd wake up and it's in a loss, and I'm like, what the hell?
Yeah.
And I think you made the comment the other day too that like for you it works better to only do scalping, because like you're in, you're out, whether you lost, you have an answer within, we'll say 10 minutes, and then you can pretty much go on about your day. Whereas with me, like I've been trading, I would say probably 3 or 4 years, but it's just been on and off. And like what I would do is I would get into these like groups, try to say that I understood it when I really I don't think I understood it fully. And then, get onto a challenge and blow it. And it's literally the same pattern that I feel like every trader makes, honestly. So
Yeah, it's a cycle. Like people will go from one group to another group, and it's like you're learning something new and you never fully learn what that group was already teaching to begin with.
yeah.
But yeah, no, I agree with you. Like I've been trading for a long time, and that's the worst feeling. You take a trade before you go to bed, and you're in profit, and you go to bed feeling good, you wake up and you're at a loss, or it stops you out, and you're like, what the heck? And it's a lot of the time it's like right next to your TP, and it
Yep.
just reverses. And the thing is, you can't do anything about it because you're asleep. And that's the thing I like about scalping, is because you know if you win or lose. And it's more like, it's more of a patience game. I feel like when you're doing intraday or swing trading, it's less patience, because you can kind of just take a trade and then just see what happens, over the next couple hours or next couple days. But for us, it's really just, we're really waiting for that little opportunity, and we're just getting in and out. And you can, like, for me, I started trading just to have freedom of time, not really freedom of money. Like, freedom of money just came along with it, but it's more so just freedom of time. So I can just be on the chart for like an hour and then be done, and then do whatever I like. So yeah, I just asked how long you've been trading, just to gauge, like, your knowledge of like reading the charts, like even a naked chart like this, like how I grew up. This is where everyone starts, but once you turn on the indicators, that's when it starts to like really show little opportunities for you to make entries. But yeah, I mean, it seems like you have like an idea of how to read the charts. It's really since you haven't been so consistent, I think that's what makes it a little difficult for you, because you probably like would stop between a period of time, and you don't understand how the market shifts between like, winter to
Yep.
spring to summer. And I've been like consistent. I've been training every day, same time. So it's like, I know exactly how to move to this time of the year. And that's why I'm able to adapt with it. So, it's just going to take time. It's really going to take time for you to train your eyes, because even for myself, there's going to be some days where I'm like, oh, I know exactly what's going to happen. Like today, I knew exactly what's going on, and everybody made a ton of profit. But it's not like this every day, because the market's changing. And I think now the market's even more complicated, because there's so many people trading, that there's just so many different things that are happening. The good thing for us is that, like, we're scalping. So like when the market isn't moving how we want it to, we can just sit out. We're not going to be in the position stressing because we're like holding this position from like the previous day or the previous week, and then market decides to do like the complete opposite of what we expected.
Yeah,
Yeah.
that makes sense. I think one of the things too that like just talking about market movement and stuff and like training my eyes, a lot of times I've noticed that um I'll get into a trade honestly, just like there's no strategy to it. I just like I'll be on a demo and I'm like, I think price is going to go this way. And in my head, I have maybe like one reason, like one logical reason, and then it will literally go down, hit my TP, and then take off, or hit my stop loss and take off in the direction that I thought it was going to go. And that's the part that I'm like it makes me feel good about myself, but also like poop, because I'm like, well, I just got stopped out, but at the same time, like I did have the general consensus of where it's going. Um, but sometimes I look at the chart and I'm like, okay, there's big wicks, it's gonna reverse versus there's a retracement. And honestly, I think it's because like I learned one concept to start, and then I learned, like, in my opinion, smart money concepts or ICT versus retail, they're literally complete opposite. So like in my head, I'm sitting here putting one together and then the other one like order blocks. And it's there's a lot of like noise in my head that is just like messing me up, because I'm trying to create this channel in my head of everything combined that I've learned over the years, and I'm like, it's not worth it, because there's a
Mhm.
reason why I'm not doing that anymore. It didn't work. So, it's just a matter of me getting that out of my head to say like we're not trading this way anymore. Um
Exactly.
so
Yeah. Yeah. Like there's a saying that people say, it's hard to like, to learn how to unlearn what you've learned, which doesn't work for you. Because the thing is, like, there's a lot of ways to trade, and there's a lot of ways to make money in the market, but realistically, it's just finding what fits you. Because like I trade completely different from, like, like you mentioned, retail and ICT. I don't even fall under any of those categories. And I just been trading the same way over and over. It's just a consistency that I was able to, develop over the years, where it's like, okay, it's my way or no other way. It's like, people will hop into the chat and be like, oh, do you know like supply and demand or any of this stuff? And I just like zone out all that noise, because I already know what I'm looking for. And I think that's kind of what you need to do, and what a lot of people need to do as well, because like things don't mesh. Because like you said, there's so many things going on in your head. Like you'll look for something, you're like, okay, price is going up, but then you'll see something like, oh, there might be a resistance up here, and it's going to screw with your thought process. Kind of like what happened today here. Like for us, some people were looking at our liquidity zones as resistance, and you could see from like the the retail sentiment, like the number kept going up because people kept trying to sell there. But it's crazy because price never came down. It literally kept going up and it's still going up now. And like everybody who is identifying those liquidity points as a resistance, they just kept getting stopped out and they kept, stacking on those sells. But it's like, I just kind of learned how to not do that because I've lost enough and I figured, if I'm doing what everybody else is doing, it doesn't work. It works sometimes, but I would say long term, it doesn't necessarily work. Yeah.
When you say, I think it's like price being overextended, you usually say that's around like 1,000 pips?
Generally, yeah. So like well, it depends on how the market's moving. So say if the market's ranging like 500 pips for the day, then 500 would probably be the number for overextension. For example, today we started trading at 6:30, and I think I measured it from down here. So if you measure it from here until market open like 6:30, see how like the range is about like 1,230 pips. At that point, then yeah, 1,000 would be the number. If it was different and price was barely moving like this much, then that would be the number. So it just depends on the market conditions for the day. Some days market will be very slow. Some days market will be very fast. Usually during like very volatile times, it'd probably be like 1,500. That'd be generally the overextension point. Because that's usually where it makes its first leg. Like typically it'll do something where price will push up slightly, pull back, push up slightly and pull back. So that's how you could identify where the overextension is, right? You just identify where that push went and then the retracement back down. For example, today, you can see here that price would push up right there, retrace, push up right there, retrace, push up right there, retrace. And then if you were to measure this here, you can see from this point, it's about 1,000, 1,200, price pushes up again right there. About 1,000. So you can see where like the overextension would be identified. You basically want to identify it before it gets overextended. So like, for example, like you said, 1,000, right? So if we have a market at 1,000, you could prevent getting caught in the retracement. Because if you got in like right here where price is up 1,000 pips, then you could be stuck in the consolidation. Same with this, right? Your price pushed up. And it's just like these same patterns that just keep repeating themselves. And this is just stuff that I've seen over the years. So like, that's why I kind of figured out. And I think that's the good thing about like sticking to like just one asset, because we know exactly how US 30 moves, right? We've been doing this every day. When you go from like different Forex pairs, like AUD USD to Euro USD to GBP USD, they all move different. So like, you can't really figure out what overextension is unless you really have an idea of how that pair actually moves. So I like keeping it around like whole numbers. So maybe like 500 pips to 1,000 pips to 1,500 pips, because I just want to have like a gauge of like before it actually gets overextended. Because realistically, 1,000 pips here wasn't the overextension. Overextension would maybe happen right here on 1,000, a little below 1,500, because this is where price started going sideways. So yeah, it'd be around there. I mean, but you just have to gauge it. Like you just want to look at market structure before you get to that point. Like for example, we started taking the first liquidity trades, I think like right here at like 6:37. So market opened over here. And what you would do is you would just measure it from like wherever price started pushing up until where price is currently at. So price is right there and it's like at 1,400 pips. You just pretty much gauge it down to like where you would have those whole numbers, 1,000. And you can see right here, that's exactly where price started consolidating right here. So like if you were to measure it again from this point, from this lower end, you could pretty much see that that's where the overextension would be. Like say, for example, you had a liquidity area over here. You'd be like, okay, price is probably gonna get overextended on this area. See how like it rejected? I didn't even know where it was gonna reject off that point. And we already had an idea because we had 1,000 marked up right there. So if your liquidity was right there, I'd be like, okay, I'd wait for this to retest, right? And I say that on live every time. It's like, I didn't even know this was going to be there. It went exactly to that 100 points or 100 pips. Price pulls back, and then that's where you make your entry on the second retest. So at that point, you'll have your entry for liquidity if liquidity was there. And you pretty much hit it on the bullseye right there. See?
Cool. Yeah.
Yeah. A lot of people don't realize that. Like, it's really simple. It's just that you just need someone to really show you. Like, I didn't even know this was an example. I just kind of did this off the top of my head, but it played out. And if you do the same thing again, So like, for example, we marked up to 1,000 right there, and then you just do the same thing from this point where it started from. And then you have another idea of extension right there. Right? So that's where price goes sideways again. So if you had another area of liquidity at that point, you'd wait for it to pull back because it rejects directly off that area, rejects directly off there, wait for the retracement, pull back, and then you're like, okay, price is going to come back and retest it. I'll get back on that retest. And then you just do the same thing again, go straight to your TP. So it's just little tricks like that. It's just, you know, a lot of the stuff is in my head, so it's hard for me to explain to someone.
Yeah.
I think that's why these one-on-ones work really well, because you can like talk to me directly and I can literally show you an example of what you were looking for. Because I'm sure it looks a lot clearer now that you've seen it versus, you know, us typing in the group mentoring session and stuff like that.
I've also noticed, and I'm not great with the V1. It's just something that like I've wanted to pick up just because I feel like it's a really good strategy for like a little bit of retracement and then push back through. But I feel like for some reason it seems like I'm getting into the entries too early. So like if you zoom in, and I don't know if this is an actual entry here, I'm just like saying off the top of my head, this is kind of what I've been seeing.
Yeah.
But like if you zoom in on this right here at this place where there's a lower low right there, let's just say for example that like the retracement, it's like a shallow retracement at the beginning, and then I see like a double body, and so I take that entry there. Whereas yeah, and then it ends up actually going even below that. Yep, it's just like that.
Yeah.
And I've noticed that over and over, and I don't know what my trading issue is with that, but
Yeah, so let's see. So I think the main thing here so if you turn on the sessions, you can see that. And I think someone else mentioned this in the group too this morning. He asked if this was like, or actually this was pre-market, so maybe not this specific entry, but I saw an entry like this. That's where the red flags come in place. And that's usually where I would avoid it. Like, for example, here, I know a lot of people forget about the red flags because I haven't mentioned them in a long time. But yeah, if you turn on the sessions, I don't know if there was news price. So, you know, there's a lot of different factors that could be affecting the market, but I think the red flags is like an umbrella of things to look out for. Like, for example, here, if you were to take this for, you know, the buy position, like you mentioned, yeah, see, I would have avoided it because your TP would have to hit, it would have to pass the sessions right there. So that's just one tool to use. But I mean, there's a lot of different factors here to identify something like that. Another thing is you can do the same thing that I just mentioned earlier, right? Like you would measure it to see if price is overextended. I think overextension is like something that's overlooked a lot. So like, for example, your price pushed up to that 1,000 area. And if you really wanted to take this trade, because you'll see sometimes like when I do see a V1, I'll say, oh, this doesn't look good, so I'm just going to wait for it to retrace. And that's like a situation where you could have waited for it to, you know, pull back a little bit and then have your buy stop just like waiting there so that when it would come back up, it would just fill your order. So
that makes sense. That's something I need to utilize more because I think I see it and I get impatient about it. And then I just take the trade. I'm like, oh, well, I just lost it. And
yeah, that's the problem with like the 1 minute chart too, because you don't have too much time to think. Like you have to like really be on it. So I mean, yeah, there's a lot of different factors here. For this specific V1, I probably would have avoided it because I'm just looking at the timestamp over here. The candle started moving a little crazy because this was market open. But I know what you're talking about. You know, I see that happen time and time again. It happens very often where you tend to get in a little early, it'll stop you out, and then it'll go straight to your TP. One thing that you can do, which I've seen a lot of people do, is they just timed out their stop loss. Like they're gonna get stopped out more often than not, but they just use a 100-100. So they use a 100 TP, 100 stop loss. So like the price does pull back, like you mentioned, they'll just get stopped out. And then when it comes back for the retest, they just get back in and it closes them out and break it. That's something that you can do. I personally look for like really quality entries. So like, I usually don't plan on losing. Like if I'm taking that trade, I'm set that it's going to win. But if you want to take more entries and just practice, you know, you can always set a smaller TP stop loss. You just have to actively be watching it. Like I had a mentoring session with Hussein the other day, and I told him about that. It makes sense, but he doesn't want to have to like take multiple entries. He doesn't want to have to wash it. He gets stressed out. So like for him, it's like, it's either it's going to win or it's going to lose. So he just goes with the 300, 100. So that's another thing you can do. If you like to do the V1s and you're actively on the charts, like you're actively watching, you know, if it hits your stop loss or not, then that's fine. Just re-enter on the next opportunity. Because you could have done that here. Like, for example, you could have lost that first trade. And then when price would have came back up right here, you would have re-entered and then you would have made the money back. You basically would have been back at break even and then on to the next one.
Yeah, that's true. I didn't really have a line of questions lined up. I just wanted to kind of see what floated through my brain tonight.
Yeah.
But you mentioned a lot. You're like, as soon as it opens, like as soon as market opens, you're like, I don't like how this market's moving. Or I don't like how these candles are. Can you like just kind of go through that, like what makes a good day and what makes a bad day for your trading style?
Yeah, sure. So for the most part, all of our strategies are based off trend and momentum. So in order for the markets to be in good condition, you typically want price to be moving directional. Like you want to have a directional push, and you're not going to see it too often during the summer because the market is kind of choppy. It's just not enough volatility. So typically you want to see price moving, you know, up and down, like smoothly, like in a direction, because that's basically how like a lot of the strategies will work perfectly. Like if you're applying like a pivot scalp or momentum scalp, you're basically just waiting for retracement and then catching it as it continues. So like the type of market you're looking for is something that pushes up, retraces, pushes up, retraces, pushes up. That's like ideal market. We don't get that much in the summer. And like, for example, here, so I'll go back to 6:30 before market open. So you can see here that price was moving a bit directional prior. But then if you look closely, market actually started moving, it started ranging like between 6 and 6:30. So market open right here at 6:30, price is ranging a bit. Whenever we see market moving like this, and the thing is there was news at 5:32, this like big crazy looking candle over here. So that's typically like a couple of things that I look at. So news over here at 5:30, I look at whether price is correcting back up or if it's moving directional from where it moved from the news. So price kind of went both ways right here on news. It had a big wick on top, big wick on bottom, price dropped below, came back up. This is technically where price should be, but then it ended up pushing up higher here. So this is now the new range where price is going sideways. That's like one thing that I look at. I try to see how market is moving pre-market, see how market reacted to the news price right here at 5:30. And then once we start to get to liquidity, and I think the liquidity was sitting somewhere slightly above this area from this morning. What I like to see is I like to see how the candles move on open, because sometimes the market will be moving very slow and it's just like normal candles. And then sometimes it'll just be kind of crazy. Like today, this was the opening candle at 6:30. I saw that the candle was moving. There's like big wicks on both sides. And when I see something like that, like for example, right here, we have this green candle and it has a big wick on bottom. This is good because it looks like it's bullish, right? Because price is pushing away from the bottom area. It's pushing up. If we got another green candle over here that was nice, then that'd be okay, cool, perfect. Because we had liquidity sitting up here. So then that'd just be setting up for a directional push to the upside. So if we had a green candle next, I'm like, okay, perfect. It's going to push through. We hit our liquidity and then we can possibly get an entry from there. However, the next candle here that came up was like the complete opposite, right? It wasn't that green candle we were looking for. It looked like a nice green candle initially because price pushed up and it looked solid. And then this candle came back down. And I was like, okay, this is not looking so great because we have a big wick on bottom, big wick on top. And a lot of this stuff I can't necessarily tell you to look at every time because every market's different. You're not going to get the same pattern every day. And it's not always going to play out the same way either. So when I saw something like this morning, I was like, okay, big wick on bottom, nice. We're looking for a buy anyway, so I want this to continue pushing up. Once I saw this red candle right here with this huge wick on top, this is where I'm like, okay, the market looks very uncertain. Whenever you have like no confirmation of like where price is going on open, then at that point you're kind of like iffy with what's going to happen next. So the next candle came up right here, and I was like, okay, this was just a manipulated candle, and then this one right here is one that we were actually looking for, right? Because if this candle right here had this one, then I was like, okay, perfect. If this is the case, then it goes up to our liquidity, I'm going to take it. But we had this candle in between, which kind of made things a little bit indecisive. So right here again, see how it follows through? Like just imagine that this red candle wasn't here. This is pretty much what we're looking for. It just faked out initially. So this green candle, this was a messy candle that kind of just threw us off a bit. But then I started to see this climbing up. I was like, okay, if this red candle wasn't there and we had this initial green candle, and this is the pattern that I was looking for to hit our liquidity, then at this point, great, this is exactly what I was looking for. Price pulled back a little bit, came up right there, and that's where our entry happened. It was moving a little messy, but you can see how these green candles right here kind of show exactly what we wanted, right? This is the type of market that I'm looking for. As soon as I saw this here, because all the biases lined up, we had a bullish bias for technical, and I think the biggest thing was the retail sentiment. There's like a lot of moving factors, but retail sentiment, this is where like it came into play, and I was like, okay, all the bias today are just going to play out, because the retail sentiment was like 59%, it went up to 60, 61, 62, 63, and then went up to 65, and I was like, okay, this is definitely going to play out because we had so much liquidity sitting on top and everybody was selling. So I was like, if everybody's selling, like their stop loss is going to have to be somewhere up there, right? And I was like, okay, everyone's stop loss is sitting like in these areas. And that's where the market started to move. It started to be more clear because I'm basically like identifying with, like, I think like the main thing that I'm doing during the live session is identifying what the stop losses are. If the stop losses are above, or if the liquidity is above, and we have retail sentiment with everybody selling, then that gives you a better, it gives you more confidence into like taking those buys, right? And then you have these patterns right here too. I think that's like price action. I don't necessarily like follow price action. It's just patterns that I normally see. But I saw price pushing like that, and that's kind of what gave me the idea that, okay, all this liquidity is going to get knocked out. And that's why we kept taking liquidity whenever it pushed up. So does that make sense? I know it's kind of confusing.
No, it does. It does. I think, and honestly, I traded on my own today and I did really good. My liquidity, zones weren't the exact same as yours.
Mhm.
I honestly, I go all the way down to like 5 minutes and then the 1 minute. And I just look at it like that. It's something that's like, I've only started doing it for like 2 or 3 days now. So it's just something that like I just want to try and see what would kind of happen, knowing that those zones aren't going to be very strong. But today was a good day for me, also just kind of by myself, and that was something that I want to try. I did look back on the live and see where y'all's entries were. So
Yeah, I'm
um,
pretty sure it lined up with yours because when you go to the lower time frames, it just lines up with the higher ones. They're just not as strong.
yeah. So I think I just have one more question, and then
Yeah.
I know you're busy. On like these like little retracements like this, so like the little 3 red candles, is there a way that you can kind of tell if this is going to be like a super shallow retracement or like a quick one versus a deeper one? Because I think that's just where I'm getting stuck in, because I'll either price will start ranging and I'll convince myself that it's just a retracement, and then it ends up being a deeper retracement than I thought, and it stops me out. Or and maybe that's just something that I need to just avoid altogether. But I also feel like that's where the V1 starts coming into play, because when I think of retracement, I'm like, okay, well, at some point it's going to go back up.
It's gonna crack back up. Yeah.
Right. So do you have any pointers on like any sort of, I don't know how to ask, like just uh the character of retracements?
Yeah, no, definitely. So there's a couple factors. Like, so I would look at the overall bias. If the overall bias is very strong for a buy, then that's where you can start looking for the type of retracements that you're looking for, like small retracement. Another tool that you can use that a lot of people use are the pivots. I don't know if you leave them on your chart, but if you turn on your pivots, you can, well, it doesn't look as clear here, but typically like, when price gets lower to like the yellow pivot, like for example, this candle right here kind of pulled back a little lower. The deeper it pulls back, the stronger the retracement. But I think for the most part, in order for you to identify if it's going to be a strong or weak retracement, is if the bias is strong. Because if the bias is weak, then the retracement's not going to be as strong, obviously. Or I mean, yeah, the retracement's not going to be as strong because it's going to pull back slightly. And you probably look for like one of the first 2 pivots for retracement versus the yellow. Because if the bias isn't very strong, you can see where price starts to pull back a little further. This is where I think the bias started weakening right here. And this is where I was like, okay, price is ranging, we're gonna stop trading. But you can see how like the V1s come down. Like see how price came down here. You know,
Yeah.
variation I was rejecting directly off the, yeah, that's a V1 variation right there, lower low, rejecting off that point. Perfect entry for a V1. So if you want like a quality V1, I'd probably wait for it to retrace down to like one of the lower levels. I mean, obviously these work too, but it's more messy. Like you can see there's a V1 right here, but it's not a clean V1. It doesn't necessarily go straight to TP. It kind of pulls back a little bit, retraces, it actually goes into some drawdown, or it would have hit initially, maybe, and it pulls back into drawdown and then it goes up. But you can see like if you use the pivots as a level of retracement, that's what Sisu uses. He typically takes V1s like this. He'll wait for them to pull back to like level 3 or level 4, and then he'll look for the V1s there. And that might be like one of the tools that you can use to identify. So I don't know if there's more here that came up, but as it was kind of late into the session.
Cool.
Oh, but again, right there, see another one went down to level 4, V1 variation right there. And you just use these tools as a confluence, right? Like you have the V1 strategy, and then you just use these other tools as a confluence. Like again, right here, same pattern, like back here, came down to the level 4, V1 variation, and it goes like literally straight to TP with like little to no retracement at all. So yeah, I'm not sure if you use the pivots in this manner, but this is definitely something that you can use. You can either use, there's a lot of different factors. Like you can use this, or you can even use the SRs. I don't know if you've ever used the SRs before. Some people use the SRs as well. Sometimes they use them together. They look for a V1 variation, and they look for it to reject off an SR and a pivot, and it just gives them like, you know, like a double or triple confluence. It's rejecting off structure, plus you're getting the reversal pattern. That's like 3 confluences. Like, okay, price is probably gonna bounce off this area. So there's different tools.
Is your SR zones, are they color coded for a reason?
Yeah, well, the green ones are necessarily where they were initially established as support, and the red ones are where they were initially established as a resistance. But you know, when price breaks and closes past them, the resistance will turn into a support, and the support will turn into resistance. So it just shows where they initially came from. So like, for example, if you're looking for a double bottom, then and you have a green you know, SR zone, that's going to show you like, okay, if price broke below there, or if it's still going from that area, then it's you look for price not to break past, right? Because you're looking for that double bottom. So yeah, they're color coded for that specific reason, but I don't trade that very much. Like I don't really like using double bottoms or double tops or anything like that, but some people do. So that's what they use them for.
Cool. Okie dokie. I think that's it. I'm gonna go back on the charts and just try to keep going. I think ultimately my problem is honestly my psychology and just getting the noise out of my head. And I think at that point, like, you know, maybe it's best that I don't even try to trade the retracements right now until I can learn a little more about them, and just maybe start utilizing the third and fourth pivots instead of just going off my eyeballs.
Yeah, it makes it a lot easier visualizing.
Yeah.
But yeah, no, you know, it's just going to take a lot more time and practice and just repetition, like more time, practice, repetition, and just focusing on like one style of trading. Like I would probably just, I know it's going to be hard to forget what you learned before, but that's probably gonna be the best way. Cause like I zone that stuff out. Like people always come at me with those questions and I'm like, I mean, it could work, but I'm not gonna say it doesn't work, but I'm gonna say that my way works because this is what we've been doing. But yeah, I know it's difficult, but over time you're gonna start to like, things are gonna mesh. Like it's gonna mesh to the point where you're like, okay. And I think the reason is that you haven't had enough consistency with your winnings that you're not able to trust it. Like for me, I trust this with my life. You know, I've been doing this for so long. It's like, if this trade hits, it's going to hit. Like I'm not expecting ever to lose, because you know, the more confluences, the better the trade. And then I've been doing the same patterns like over and over for years now.
Yeah, for sure. I think that's my biggest thing is just getting the old stuff out of my head, because you know ICT never wanted to go below 15 minutes, like the 15-minute chart, and like now, you know, I love the 1-minute chart, and it's then I convince myself that I see order blocks and I see this and that, and I'm like, oh my God, you know, it's just like it's almost like a squirrel brain because I'm not sticking to one pattern or one strategy. And I think that's my biggest issue. But that's, you know, that's a me thing. You can sit here and tell me all day long I need to forget about that and do this. And, you know, if my psychology's not on point that day, don't trade. But ultimately, until I decide that that's what I need to do, that's, you know, it's going to be this continuous cycle for me. So I feel like
Yeah,
every trader goes through that, honestly. It's just one of those things where eventually you just you get tired of losing and you're just like, I'm not losing anymore. Either I won't be in it or I'm not losing. So
yeah, exactly. No, and I agree with you. Like, I don't know anybody else who really trades on the 1 minute like we do. It's just people are scared to trade on the 1 minute because they don't understand it. And it's the same with like like myself. I don't trade on like the daily because I don't understand it as much as I do on the 1 minute. And I just like to know right away where I'm at. But yeah, no, you know, it's just really it's just rediscovering your trading style, and eventually it's going to make sense. You know, once you start like finding consistency and you just keep winning and you have confidence in your trading ability, it's all just going to fall in place. Like for me on the live sessions, I don't even think sometimes I'll just see an entry and I'll be like, oh, this is speculative, but realistically, there's a strategy behind it. It's just I can't explain it. You know, it's like it happens so quickly, and I'm like, this is going to go here, so I'm going to just and I just click that button. I'm like, oh, sorry guys, I made my profit, but so quickly where
yeah.
I can't. Yeah, and it's tough because like I know people get upset because they want to know, but it's like this just comes from experience. I just see it on the chart
Right.
and I just take it. And I don't mean to do it purposely. I feel like people think I do it on purpose, like I'm stealing profits from the market and not sharing, but it's just, you know, it's just skill that comes.
No, that's just what I feel like it just comes that way naturally. I mean, that's what you get when you have experience and years of going through the market every year and every day. And that's just how, I mean, I'm only mad at you because you don't I feel like you don't travel enough. Like, I feel like, like that's one thing that I would love to do is just literally like wake up on a cruise ship and play on the market for 45 minutes and then be done. And you know what I mean? Like
Yeah, yeah. No, definitely. Yeah. No,
I
I wish I picked up trading a lot earlier. If I did, that's literally what I'd be doing. I'd be traveling everywhere and doing this stuff. And now that I'm trying to be more stable where I'm currently at, it's just, you know, it's just it comes with life.
yeah,
So,
that's fair.
you know, hopefully in the future I'll be able to do that a little more often.
Yeah, I'm sure.
Yeah.
All right. Well, I appreciate it. I'm gonna keep working on it and go from here. And I know that if I need anything else, maybe we could schedule another one sometime in the future. But I'm gonna keep working on it and work on my training my eyes and stuff. So
Yeah, no, definitely. You know, keep practicing, and then once you think you've got some stuff down, you know, we'll set up another session and we'll go from there. We'll just see where you've leveled up, and we'll just keep building from there. Because that's really what it is. It's like building this foundation and then building on it every so often. You know, every week, every month, every year, and you just keep getting better. Because if you keep doing the same thing over and over and over again, you're using a proven concept. You're just gonna get better at it. It's like, you know, learning a language or playing a sport or doing anything really. You just get better.
for sure. Cool. Good deal. Thank you. I really, really, really appreciate it.
Definitely, no problem. All right, Allison. So I'll see you tomorrow on the live session. And if you have any questions, you know, feel free to reach out.